12:07. All right, YouTube guys. We're live. All right, YouTube guys. All right, looks like we're live. We're live. Okay. 12:07. All right, YouTube guys. All right. I wonder if this waiting schedule for this. Okay. How do I mute this thing? 12:07. All right, YouTube guys. Mute. Okay. All right. Brad, good afternoon. How are you? All right, let's start. Yeah, I paused the echo should be. Okay. Let's start. Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. This is my brief bio. I was Executive Vice President, Head of Technology at Options Express from 1999 to 2007. Started Tradespoon in 2012. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally, managing and trading my own money. I've been doing it for over 15 years, mentoring and teaching subscribers how to trade stock and options. And finally, I have a master's degree in computer science, specializing in statistics. And artificial intelligence disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. All right, YouTube, we're live. Please click on subscribe. If you do find this information useful, please click on share and share the videos with the if you're part on on YouTube or any other social media. Please click on subscribe. We are the goal is to get to 1,000. You guys have been awesome. We are the numbers are going up. So for those of you live, we only have few subscribers, but usually we have 50, 100 people sometimes watching these videos. So please, when you watch the video, don't forget to click on subscribe and like, and that will help us tremendously. Main development again from this morning, what we talked about is this 10-year yield, right? This is bond market versus equity market, right? Alon and I is actually writing the blog, and we were talking about spiders, right? Spiders are down about 4%, right? From 410 to 390, testing 390. Spiders are down, and Treasury is up, TLT is up, right? And the correlation was throughout the year is the reverse, right? The correlation is that when spiders are down, Treasury are down. Why? Because traditionally for the past 40 years or beyond that, for the past 100 years, money has to go somewhere. So safety, they go to bond market, and when it's risk off, they go to equity market. Risk on to bond market, and those two buckets don't change, right? So this is the debt, right? This is the equity, right? And money either go from debt to equity or from equity to debt, right? Risk off. Well, people buy bonds. Risk on. Risk on, risk off, right? People buy equity. That's that's the model that's been working, for the past 100 years. I think there is 5 years out of those 100, so 5% of the time, they're going the same way, right? They both go in the same way, right? They both go in the same way. So this year, risk on, right? Risk on. Both the money are going into the equity and into the bond market, right? Or the opposite. Right now, this is going. So that's past 24 months, right? This is past 12 months, right? So the past 12 months, this is correlation. The past 10 years, except few exceptions, this is concept. Very important concept, very important to understand, right? That the money has to go somewhere. You don't keep them in a basement, right? You don't keep them in a mattress. They usually go somewhere. I mean, you used to keep them in the mattress, maybe a couple hundred years ago, but now not a lot of money are in the mattresses. They're somewhere, right? Or cash, right? Or cash. In the cash in the bank. So very important concept. This is, again, there are two things going to happen, right? Either we're going to go back to historical correlation, right? The reason we have this correlation because of the inflation. The reason this is because some fear of recession, right? Somebody's fear of recession, stagflation, so then the money is floating back and forth. So because of the inflation, yield is up, market is down, right? Right now, yield is down, market is also down, right? So Friday and Monday we'll know. In theory, if the CPI, if the trend is that inflation is subsiding, either plateauing or going lower, and if the perception that Fed will pause, it doesn't have to pivot, even if it pauses, then the path of least resistance, this break of 3.5% will continue, right? That's scenario number one, right? Scenario number two, CPI is worse than expected, PPI is worse than expected. Fed basically says, we're changing our mind, we're not going to pause. Yes, we told you we're going to pause, but now we're not going to pause, right? Which is, unlikely event, but, one has to consider. So, two, right? Or could be, it depends how worse it is. And there's still a lot of people think that this is not the low, right? Right now, we did break through. From technical perspective, I would say this is the low, but there are still few people that think we're going to make new lows or new highs in 10-year yield, like 5%, 6%. I'm not in that camp. I'm in the camp that, yes, 4.5%, we can get back to 4.5%. Can we get to 5.5%, 6%? Most likely no. Right? I'm going to give credit to Jerome Powell. He's probably not going to back away from his statement that we're likely to pause sooner than later. So that is the main price action. I would keep an eye on this, right? I would keep an eye on TLT. What else is brewing? Dollar is staying at 200-day moving average. Oversold, should rally back. And spiders are fighting for the 390 level, right? Back and forth. But, it's not making new lows, but it looks like it's trying to build the bottom, right? It looks like it's bottom. It's not going lower. Last 15 minutes is usually important. I would wait for the last 15 minutes to make a decision. 7 watching. All right, I like it. YouTube guys, if you're watching live or if you watch the recording, most of you watch the recording, please click on subscribe and like this. I like this too. Okay, and subscribe. So that's important. All right. And you can post the questions, right? Hi, everyone. Please type your question. Welcome. What is everyone doing? All right. Okay. Any questions? Fred, excellent call on TLT. Thank you. All right. In theory, since we are breaking, from technical perspective, since we are breaking this medium or long-term trend from June, right? We're down more than 50% now. Let's see. We're at 50%. The longer we stay below 3.5, or dip below, then the higher the likelihood that the top is set, right? That's the argument, in social media, you turn on TV, you read Wall Street Journal. This is a, elephant in the room. Is this the top in yield? Have we set the top in the yield? Or are we going, to 5, 6.5%, right? I think one of the Fed committee members said, don't get too optimistic. The yield might top out somewhere between 5 and 7%. If he's right, then this is not the top, right? If he's wrong, then this is the top. From technical perspective, if the longer we stay here below this line, the higher the likelihood that that this is the top. Yes, it's oversold, and bounce usually market doesn't trade one way, right? But something along those lines. Lower highs and lower lows. Okie dokie. Any questions? All right, let's review the position, see if we want to make any adjustments from this morning. Did I do any trades? So I did close XOP, right? I closed the XOP, 130 put. Again, there's only 1 week left. So it's either going to go to 0. I decided not to wait for it to go to 0. I did buy March put spread. Right? So I don't want this to be at 0. So I'm closing, but I'm still bearish. So I'm still bearish on oil, right? And it was a good call. Unfortunately, just like with TLT, it's a little bit off in timing. Timing is difficult, right? It's difficult to time, right? I didn't think we're going to break this level. We actually did and stay there longer than the last time. But nonetheless, the path is correct, right? The path of least resistance is for crude oil. We're heading to 60, right? We broke through the main support level. We're heading to 65 level, right? Pre-Russia-Ukraine war. Accidentally very close to the pre-pandemic level, which has been support for a lot of asset classes, right? Pre-pandemic high. So and that's where we're heading. We're heading to 65 level. Another sign of a lot of people are scratching their heads. Russian or Ukraine war, oil price cap. Saudis are not pumping more oil, pumping less oil. But supply demand, there's 2 unknown variables, right? It's supply and demand. Just because supply is down, and just because United States signed an agreement with Venezuela and now buying Venezuela oil, right? That doesn't mean that demand is going to go up, right? So, and that is probably the best explanation why the oil is approaching 65 level, crude oil. All right. Okay, so still bearish. December, I'm out. There's actually an execute order to close because it's another execute order. I still have 140, 120 put, and so far it's actually going in the right direction. Right? It continues to appreciate in price. All right, NOC, still long NOC, small position. Again, Russia-Ukraine war. I think there is the light at the end of the tunnel. I don't know how long is the tunnel, but I think it might come to abrupt at least status quo, which is going to be bearish for NOC. It's going to be bearish for oil, for commodities in general. So I would not. I mean, I think I don't think it's going to happen tomorrow. I don't think it's going to happen 2 months from now. But sometime next year, it's totally possible, and maybe sooner than later. Right? It was the idea that Ukraine is retaliating and now bombing Russia. Russia is not sending nukes, so that means that they have to find some kind of an agreement. And the sooner, the better, right? And I agree. I like that theory. It's a theory. I like this, and I think Russia can, do whatever they want as long as nobody's retaliating. But if someone is retaliating to a point where they're attacking Russian infrastructure, well, that's a different story, right? Then the tables are turning. And again, it could be escalation or it could be de-escalation. Since there is no escalation, then I'm going to assume there'll be de-escalation. And you can see it in oil prices, wheat prices, gas prices, all commodities across the board. QQQ, 300, 310, again, as long as the market above 390, 1 week doesn't set the trend, right? We have 1 week down. If next week, obviously, if the next week we're down, right, kind of this price action like we had before, then we have set the top, and I would start thinking about closing all your, or trimming a lot of your long positions. So a lot of it will be determined tomorrow, next week. If we're gonna finish in the red, then I would start closing long position. If next week we finish in the green, then we still have time to go higher. But UNG seasonal, no, UNG I don't think follows the seasonal. UNG is following, OPEC and Russia-Ukraine war. This does not look like a good price pattern to me, right? This looks like elevator up, right? We've seen this with meme stocks, elevator down. So, I wouldn't chase it. If anything, I would short on rallies, right? It's unable to rally, right? So anytime it rallies, I would short the gas. Right, all the news already factored in, right? The gas, they shut down the pipelines, they're putting embargo, they're putting oil cap. There's nothing, it cannot get worse. Well, the temperature, right? I mean, I guess it's a freezing cold. I think Ukraine was plus 10 degrees, plus 15. We're in the middle of December. If it gets to minus 20, minus 30, well, yeah, I think gas is going to rally. But as long as December average temperature in Ukraine is still 10 degrees, I mean, this is Celsius, then, I'm bearish on the commodities in general. All right. Okay. So that's QQQ. Still have one, bullish position, 300, 310, 275, 280. So end of December, I'm still bullish. Christmas, everybody's in good mood. Christmas rally, I like that. I subscribe to that seasonality. Window dressing, Christmas rally, tax harvesting. All of that makes sense. So for now, I'm still long. In March, I think the tables will turn around again. I think lower yield, people are gonna move their funds into bond market and push money away from the equity market, at least the first 3 to 6 months. So I'm adding to us H. If you're not comfortable trading options, and these are complicated two-legged strategies, which most people do find them difficult. It takes time to kind of understand this three-dimensional animal with direction, time, price. It's like calculus 3, which is I remember taking in college. Some people just can't see in 3 dimensions. Most people cannot see in 3 dimensions. Options, you have to see in 3 dimensions, right? It's not 2-dimensional, just price and time, right? It's price, time, and magnitude. I mean that stocks, you can be off on time, but you cannot be off on time for options, right? You can be right on direction, you can be right on magnitude, but if you're wrong on time, then trade is not going in your direction. I did buy, recently spiders, added to small position to spiders trading around this position. I think we will get to 400, right? That is my core scenario, that we at least retest the recent highs. So this is more of a short-term trading. Long-term March 38, 35 call, bearish on XLF and banks in general. Sold 35, 38 call spread, bought 35 put. And then I'm doing short-term trading using option wheel. Right now, 130.5 put, XLK. The trade is going against me, but it's also sitting at the key support, right? It's also sitting at this key support. And, it didn't break down, kind of similar price action here, like kind of building anticipation into CPI data, PPI data, or the Fed speak, right? So, I mean, same thing. If I see it, going up, then okay, if I see the reverse, it's going down precipitously, then I have to close or defend the position. But for now, it's kind of just waiting for, I mean, the next news, I think, not tomorrow, but Friday. right? Friday would be the PPI data for November. If it's better than expected, like October, then we're in business, right? And the market will rally. Any questions? I have a lot of people joining. Thank you, guys. Tom, Raymond, Randall, Phil, Mahfouz, Lalit, Cool, Kent, John, Ganesh, Fred, Dennis, Alan, and Larissa. Welcome. Any questions? How many people do we have on YouTube? 7. Okay. 3 likes. Okay. No questions. Okay. Okay. So we went over all the trades. I know I usually do earnings in my personal account. I did sell call GameStop. This is a meme stock. I said I never trade meme stocks. I decided, take my chance again, because you can sell, 30% out of the money call that expires on Friday and receive, 0.5%, 1%. And it's a $30 stock. So you trade one contract, okay, it goes by another 10%, okay, fine. And you probably can still hedge your position, right? Because with meme stock, it's a retail flow. They're going to announce earnings after hours. You'll see it it's not going to open up 30% up. It's going to be slowly building up. So I sold calls. I didn't sell puts, right? All the earnings, prior earnings, GameStop is actually sold off or didn't move that much, right? Here, it actually is pulling back. We haven't had a strong earnings on GameStop. I can't imagine this time. But, with this meme stocks, I just don't know when these Wall Street mavens all of a sudden gang up and start buying calls. But it's a retail flow, so I would watch the announcement after hours. I sold, I think, what did I sell? I don't want to do it in trading block account because, again, you guys are in the live trading room. You invest in education. You're a lot more savvy than average, Tradespoon or Yellow Panel subscribers, right? The reason you're savvy because you invest into education. Most people just follow signals. They have full-time job. They have other commitments, and they just, and then they just don't have time. Which is, I get it. So for that reason, I'm not. So 31 calls trading at 16 cents. 31 calls trading 16 cents. So it has to rally by $9, 50%. And I mean, GameStop, if everybody piles in, they can push it. But usually it's not around earnings. But that's it's a liquid name, right? It is a very liquid. A lot of people are trading it. So I decided, have a little fun and small size and just sold out of the money calls. Ganesh, Tesla, Bitcoin, same thing. The same thoughts on spiders. Tesla is extremely weak, right? So it's underperforming spiders. So Tesla is in trouble, right? Tesla is in trouble, just like Bitcoin, right? Very highly correlated to Bitcoin prices, right? Accidentally, I think they're both, 60% down or something along those lines. Yeah, Bitcoin is 60% down. Tesla is 60% down. Their price pattern probably going to look the same. Right, probably going to look the same. Bitcoin, how much is Bitcoin down? Bitcoin is more, 77%, 66, 70. I mean, it's the same thing. My thought: Bitcoin is going to be half of what it is now, right? Bitcoin, let's see, futures, Bitcoin futures. By, let's call it June. By June, it's trading at 16,000, probably half the value, right? So it'll be 8,000. So Bitcoin is probably going to 8,000 because spiders are dropping, right? I think spiders are going to drop, 20, 30%. So Tesla, unfortunately, even though I love the stock and everybody's in my family drives stocks, and I have a lot of friends that have a lot of Tesla stock, but I'm not going to say what I don't believe in. Unfortunately, there's really no support for Tesla from technical perspective. And February, 2020 pandemic, right? We talked about oil pre-pandemic. It's way out, right? $80. So I'm not saying it will be 80, but somewhere between I don't know, next support is here. Somewhere between 120 and, you know, $60, right? So it's somewhere between 60 and 120. A lot lower than it is now. A lot lower than it is now. So end of the year, can it get to 200? Can it get to 220? Can you day trade it? Can you do, if you're an aggressive trader, can you squeeze 10, 20% rally, right? I mean, they happen all the time, right? They happen all the time. So doesn't mean that we're not going to have this, but it's a pattern of lower highs, lower lows. If you're aggressive active trader, you can say, okay, Vlad, I don't care what you say, you know, here's good support. I'm going to buy tight stop level, you know, risk versus reward, I think makes sense, right? I mean, you can get to 240 to 260 and your stop loss is here. And I think that's a normal trade, right? Bottom building, bottom building, bottom building, you know, and then boom, you know, 50% retracement, right? 50% retracement. Or no, sometimes 100% retracement. So 100% retracement, 50% retracement. You can reasonably assume that Tesla is getting to 240, 260, right? They're pushing new trucks, they're, you know, buying Twitter, you know, they're doing stuff. Okay, anything else? Any other questions? Footprint of China is buying more EVs than, you know, they produce electricity with coal. I think the issue is not the electrical batteries and, you know, rare earth materials. They are an issue in the bull market. In the bull market, supply chain are issues, you know, wages are issues. But when Tesla comes out and announces that, you know, China demand dropped by 20%, there is a reason for that. And it's not just lockdowns, right? There is more than just lockdowns. China's economy has serious issues. And Tesla is heavily invested in China. Everybody who is heavily invested in China, whether it's Apple stock or Tesla stock, or you can Boeing stock, I mean, any multinational companies that have exposure to China, this is going to be, you know, they're going to be in trouble in the next 6 months. They're going to be in trouble in the next 6 months, in my opinion. So I would stay away. Unless, again, unless you're doing short-term aggressive trader, next 2 weeks trying to squeeze the rally, okay, fine. Any projections when the bear market ends? $1 million question, right? We're asking $1 million questions, right? If I knew it, I would not be here. But I do have an intelligent opinion and an estimate. I think we're very highly correlated to 2008 recession, right? It started a little bit earlier. Market topped out in September, not December. It reached its crescendo in, you know, it dropped in October, November, did have a rally into the year end, right? And then dropped again, lower in March. And then that was the low, right? So I think March, or because we're off by 3 months, it started the bottoming process in September, then June. And this is, I think, more common opinion, that the market will reach the bottom somewhere between March and June. Does it have to be this way? A lot of assumptions, right? Assumption that the Fed, that the inflation is going to be contained. The assumption is that, you know, CPI, PPI data will drop, interest rates will drop to 2.5. You know, the only way it's going to top out if the 10-year yield basically, you know, reaches, I don't know, 2.5%, 2%, right? So if yield is staying 2%, 2.5%, right, and Fed pivots, right, or at least the Fed pivots, right, and, you know, you only have 2 quarters of negative GDP or negative earnings, then it can recover, right? Some people refer to, you know, great inflation of 70s and 80s where the market didn't go anywhere for 10 years. I think it's a low probability event. There are still people who think that we're going to have, you know, this is a bull market, right? So there are people that think we are in the bull market and that we're going to do this, right, next year, right? This is a low probability event. Can it happen? Yes. What's the assumption? Soft landing, right? That Fed will pivot sooner than expected and companies will not get affected by this prolonged elevated interest rate environment. So this is a small probability, low probability soft landing, right? Then there is people who think that we're gonna, in June, do a hard landing, right? Hard landing. And bottom, 300, 280, that's irrelevant, right? But 2024, end of 23, end of 24, up and away, right? Right? This is a course scenario, right? So this is best case scenario. This is the course scenario. This is what I think is going to happen. There's a lot of people who feel like this inflation is sticky. Nobody's lowering the wages. Nobody's going to lower the rent. And it's not going to be 2 quarters of negative GDP. This is like 2001, 2003 recession, right? Due to the war in Iraq and due to the September 11 and internet bubble. And that means similar, and inflation stickier, stays longer. 2003 it was 3 years, right? So end of 2024, at least end of 2024. So we're not going to reach the bottom in June. We're going to reach the bottom closer to April of 2024, right? The bottom occurs somewhere in here. And then, for a couple of years, we're trading in the range, right? So that's worst case scenario. This is worst case scenario. I believe in moderation. I'm in the middle. But I realize this is a low probability event. This is low probability event, but it's not zero, right? It's not zero. It's not 5%. It's, I don't know what it is, 10%, 20%. But it's not something that I would dismiss, right? It's not something that I would dismiss both of these cases. Any questions? 10 people watching, yay. Any questions? YouTube, no? Okay. Thank you for your question. Live trading room, yes. Mark, what do you mean by live trading room? Tom, what do you think? What do you mean by live trading room? Shipping stocks, same thing. They're in trouble. I mean, is it oil shipping or is this not oil shipping? Again, in the recession, all the shipping cars, trucks, companies are going to have trouble. One I follow was Eagle, right? Eagle bulk shipping. This is oil, grease, big sell-off, right? It did reach crescendo in June, and then it's weak. So, and we know that the price to ship from China into San Francisco, it's pre-pandemic level, right? It's lower, right? They're empty, right? 3 months ago they were filled and there was a huge line. Now they're empty. Same thing with the, oil and gas looks like they're overcrowded, right? There are, tanks sitting on the shore of Europe waiting to offload, gas and oil because they don't know what to do with it. Also not a good. Also, I mean, maybe the prices of these tankers will go up short term, but at some point, because of the lack of demand, I would not chase these stocks. ZIM, you can trade ZIM. Let's see, integrated shipping. I mean, it looks even worse than Eagle. It looks like Wall Street Mavens. Every time you hear Wall Street Mavens stocks, okay, be careful. Eagle, I think, is more better. Eagle is, very low volume, less than 1 billion shares. Dividend, they're paying 14% dividend. So people like that. People like 14% dividend. They're probably not going anywhere, right? They're not going to go bankrupt. That other one, I don't know. They might go bankrupt. I have no idea. Price to earnings 0.39. Basic EPS. EPS of 50, right? EPS of 50. Eagle, EPS of 24. Price to earnings 2, right? So I'd rather buy something that's PE of 2 than buy something that's PE of 50, right? Also traded by Wall Street Mavens. Wall Street Mavens is a game of dominoes, right? You have to understand when you trade in Wall Street Maven, the way I think about it, it's the domino effect, right? Everybody's standing. All retail people right? First one is pushing, and then dominoes falling, right? Dominoes are falling, and then where are you? Are you in the beginning, or you're at the end of the line? If you're, most of the time, most of the retail, 99% of retail investors are here. They're at the end, right? They're at the end. Fear of missing out. All the smart guys that push the domino first, they're out, right? They're out, right? These are guys that have been trading for a long time, right? They know what they're doing. These guys, they have no idea. So you always have to ask yourself, are you in the beginning of the line or you're at the end of the line? If you feel like you're at the end of the line or in the middle of the line, I propose not to chase these stocks. All right, Russian oil tankers floating around full. Right, Russian oil tankers, they're floating full. Nobody's buying. Nobody wants to insure them. It's a problem. Any ideas on Starbucks? I mean, Starbucks is discretionary, right? So you look at the chart of Starbucks, right? You compare it to XLY. And then the question is, which one is better? XLY is worse. XLY is worse than Starbucks. Okay. So instead of buying XLY, okay, so it is better than XLY, and it is, you know, above 200-day moving average, above 50. I mean, it's a great stock, right? Great stock, outperform, but it's not going to go too much further than the spiders, right? The trend. It has outperformed the spiders. You know, Schultz is back. I mean, they raised prices of coffee. I forgot what the news was here. But, you know, can it continue going higher? Yes, but it's already close to 52-week high, right? So, and it's losing momentum, right? So I would not chase the stock. Short term, can it get to 105, 107, 110? Yes. If the spiders rally, Starbucks will rally too. And potentially can outperform, continue to outperform spiders. But long term, I would not hold it. Short term, sure. What's the deal with Zim dividend? I mean, I don't trade this stock. I would research, but some of these stocks do pay dividends. But I know 1 month they pay them, the next month they don't, right? Because 14% dividend looks great on paper, but it's very hard to service, especially if you have tankers sitting with Russian oil and not moving anywhere, right? Then, you know, how are you going to make money, right? You need to move stuff. So, and then they suspend their dividends. So I would, you know, I would be very careful with these stocks. Costco announcing earnings. Ganesh, what's the timeline, right? Are we talking about short term or long term, right? It announced earnings. It already pre-announced that their sales are down. So they briefly broke above the line. Now they're trading down the line, assuming that the earnings is not an event, since, you know, they already announced that the volume is down in November. That the trend is probably going to stay. You know, I think the passive list resistance is, you know, to the downside, unfortunately. I mean, I know it's a very popular stock, but, you know, it's the same thing. I mean, during recession, Costco is not cheap, right? It's inexpensive, right? Walmart is better, right? Walmart, you know, is better, right? Because it's a lot cheaper than Costco and different demographics. And right now, most of the layoffs are in, you know, middle class, right? Most of the white-collar jobs are getting let go first, right? All the technology jobs. So now they shop, instead of Costco, they shop in Walmart. So as long as that trend stays the same, then, and you can see Walmart is already losing momentum and probably also gonna be in trouble sooner than later. All right. 8:42, we have 18 minutes left. Anything stands out? Let's see. Oil continues to drop, right? I'm closing, but it's below 200-day moving average. It's oversold, right? I mean, can it go lower? Yes, but at this point, it's oversold. TLT, right? Major price action are in Treasury market. Again, anticipation of PPI and CPI data Friday and Tuesday. Everything else is kind of quiet relatively. Insurance down 1%. Transportation is down 1%. So value stocks are underperforming. Spiders is actually almost flat going into the closing, about almost flat. Apple is in trouble, right? Apple, Tesla. This is not a good price pattern, very weak. Any other questions? Short-term Costco, I mean, it's $480 stock. I would do earnings. My thought, I mean, Broadcom and Costco, again, $400 stocks, so can't do it. GameStop is $22 stock, right? So it's 20 times less. So one contract of GameStop, I don't mind doing a couple contracts, Broadcom, you managing $50,000. So no Broadcom, no Costco. It looks like Chewy, CHW, right? So tomorrow I'm probably going to do CHW. It has decent volume, decent price pattern. It's in line with the rest of the market or ARC trades. It is volatile, but I think tomorrow I'll do Chewy. Broadcom and Costco are good earnings trades, but you need to have $50,000 in your account. If you don't have $50,000, I won't do it. Because if it does move 1%, 2% out, 2% on Broadcom, you're down $1,000, right? If your account is $10,000, I don't want to risk 10% of my portfolio. Just not worth it. Any other questions? Right, last 15 minutes, let's see. Spiders are putting up a good fight, right? They're putting up a good fight. Basically not going anywhere, going through consolidation, right? Going to consolidation, going into an event, right? Nobody wants to be super bullish. Nobody really wants to be super bearish. And the next event is Friday. Tomorrow, I doubt that this is going to have any impact, material impact. But this might, right? 5-year inflation expectation and the producer price index, PPI, for November. I think that's going to be big. Let's see what else is interesting. Look at this Bitcoin GBTC, disaster. It's almost at pandemic low. Okay. Oh, Beyond Meat is up 11%. Yay. Oil is down. We talked about this. China is down 2%. Silver, gold miners are up. Energy, so Schlumberger, Halliburton. Big pullbacks. Yeah, Apple, Google, Amazon is actually holding on. Interesting. So that's good. Microsoft is almost positive. Amazon is almost positive. So that's good. I mean, Tesla and Google, this is China's story. In banks, Wells Fargo is kind of in free fall. Airline stocks are weak. Okay. Yeah, this 10-year yield, this is a pretty steep drop. So we'll watch this level 3.5, right? This is a breakdown. The longer we stay below 3.5, then I mean it probably will change, next week, right? Next week it's either going to be significantly below 3.5 or significantly higher than 3.5. This could be a false breakout if the bond market is wrong. Any views on gold, short term or long term? Are we talking about days, weeks, end of the year, end of the Q1, Q2? What the timeline? My view on gold timeline, short term. Again, I think it's overextended. So I think it can continue to have another leg up, but it's probably trading in this last phase, right? 3, 4, 5. Right, so it's probably trading in the last 5 and then lower. 2023 could be the year for gold. It probably bottom out sooner than the equity market and people will move to gold. It's just not yet. Next couple of months. I mean, end of December, middle of January, I think it might continue going higher. Gold. Tom, Meta is better. Meta is better. Meta is better. Okay. Still, yeah, it's a very weak price pairing, right? It's basically closed the gap, the earnings gap, and heading into the next earnings. I assume next earnings is going to be worse for Meta than this earnings. So I would take some profits. Alrighty then. Any questions? 250, last 10 minutes. Let's see, spiders. Yeah, nobody wants to place large bets. Nobody's placing large bets. 6 people watch. What happened to the other 4 guys? 6 people, okay. Let me know if you guys have any questions on YouTube. And go to webinar. All right, any other questions? Looks like GameStop is selling to the closing. Let me know if you guys have any questions. All right, the last 5 minutes left. Again, on YouTube, some people watching. Please click on like. We have 5 people like, so please click on likes. I like likes. YouTube likes like. And if you find the content useful, please click on share. Take that link and any social media, whether it's a Facebook group or Discord or anything else. You have your own blog. Please post the video inside. We're trying to grow our community. It will help us. So please share the content. That would be great. And don't forget to click on subscribe. Dow Jones turned positive. Value stocks turned positive. XLK almost flat together with QQQ. Spiders is on its verge of turning positive. That's all I have for today. Short-term view on this semiconductor. Short-term, again, we're talking about next 2 to 4 weeks. 2 to 4 weeks, semiconductors, I'm bullish. Right, just like XLK, it dropped to this downtrend, right? Assuming that the bond market is correct. Let's make an assumption that bond market is correct and the Fed is not, Jerome Powell, I don't think is good. I respect him. He's a very smart person. He doesn't want to be perceived as, I can tell you I'm bullish today and I'm bearish tomorrow. But if he says he's probably going to pause, or at least give you this message, I don't think he's going to turn around the next, in 2 weeks and say, you know what, spoke too soon. We're not going to pause. It's possible, but looking at his position and looking at how he makes living and at his psychology, I don't think that's going to be the case. So I'm going to make that assumption that he's not going to change. He's not going to say anything different that he did say, on November 30th, right, during that press conference. So if that's the case, then CPI, PPI maybe a little bit better, maybe a little bit worse. Powell maybe tone a little hawkish, maybe a little dovish. Semis are going higher, right, next into Christmas rally. And again, violent price action, right? We've seen this 5% move up and down. This, we can do something like this, right? And then, as we approach in the earnings season, middle of January, this is when everybody's going to think about earnings now, right? NVIDIA earnings, TSM earnings, and NVIDIA earnings, I don't think was that great. Semis earnings reaction was actually better than expected, right? But they actually, where's the earnings? Semis, sorry, TSM, right? drawing blank, right? So TSM earnings reaction was kind of neutral, up and down, then it rallied, right? NVIDIA, let's see. But originally it was down, actually. And NVIDIA earnings also kind of, I mean, it seems like earnings doesn't matter. Did not matter, right, at all in the equation. So I think it's going to be the same. Earnings are not going to matter. It's the forward-looking guidance. They're going to say that they have too many, supply glut, and demand is down. They have too many, supply chain issues has been resolved, and maybe they'll get to this level, maybe not, right? But once the earnings announcement, it's lower. All right, 3 o'clock. You guys have been awesome. Thank you for your questions. Don't forget to click on subscribe. Very important. 11 watching. Please click on subscribe. Click on like. Share it. If you're part of any, social media, this is important for us. We're close to 1,000. The number is going up. I'm excited about that. So help me get to 1,000. Thank you very much, and I will see you tomorrow morning. Thank you. Can't Micron, I mean, there's always individual stories, right? There's always individual stories. But I'm looking at the chart pattern. Micron doesn't look much different from NVIDIA. I'll type in ON, and I'm a technical guy. Oh, they're doing something different, right? Whether they're powering the electrical vehicles, or I don't know what it is, but the chart looks different, right? So whatever reason is, now I have to dig deeper and figure out why it looks different. But if everything looks the same as the ETF, then then they're all going in the same direction. If something is outperforming ETF, you got to ask yourself, why is ON outperforming, right? Maybe LRCX too, right? Not really, but like there's some semiconductors that outperform. So then you start digging, you click, okay, what do they do? How do they make money? What's their balance sheet look like? And you say something provides industry to sense and power across the sell most change power creates cutting edge products. Okay. Sensitive, advanced design develops mix, advanced experience, standard products application. What's the industry complement? Develops complement. Image sensoring, single photon, multi-layers, diode arrays, autofocus. Okay, so it's electrical vehicle semiconductors. And everybody's switching to electrical vehicles. I mean, the issue is maybe they sell less Teslas. I don't know if ON is in Teslas or not. I have no idea, but it's different, right? It's different from semiconductors in cars or semiconductors in computers. Like this is not an Intel, right? This is not a AMD, right? So not all semiconductors are equal. So you look at the chart, and now you dig deeper and you figure out, well, these are semiconductors, image signal processing, silicon photomultipliers, photon diode array. It's probably electrical cells, right? I mean the what is it? Power panels, right? The lighting panels. Okay, it's a different industries sponsored by government. Okay, then that's probably why they're doing a little bit better. All right. Phil, thank you. All right, guys, thank you very much. Have a great day. If you are in GameStop, please watch the earnings announcement. Make sure it doesn't rally 40%. And if it does, I would consider buying stock to hedge. All right, thanks a lot.